Overall, the market's obviously absorption's trending down. However, there's not anything new that's going to be coming on the market within the next 12 months. We have some new developments that are happening downtown that will increase the amount of availability, but right now our vacancy stands at about 10.1 for office vacancy, which is way below the national average. The national average is right around the 22%, and in some cities it's as high as 30%. So Boise is looking very good when it comes to vacancy. The absorption will be something that's going to be heavily watched over in 2025.
So 2025 is going to look a little bit different than the past few years. We had, in the past 2 years, we've had about 5.6 million square feet of spec construction that's come available. That this next year, it's going to be a significant decrease. Our vacancy has gone up to about, in the 8% range, but realistically, that's really because of the spec construction that's gone on, and most of that product type is geared towards the larger users, 20,000 square feet and above. So we're going to have two separate markets within the industrial world going on. Above 20,000 square feet, I suspect that those rates will probably stay relatively flat. I don't know if we'll have much movement up in that size range. Below 20,000 square feet, I do think there's the vacancy in those spaces is probably sub 3%. So I think we'll continue to see lease rates increase in that range, in that square footage range. I do think we'll also probably see a lot more of the flex users with Micron and their expansion, and getting the CHIPS money in November. I think that's going to spur a lot of their suppliers to feel confident to come into the market, and we're already starting to see that a little bit. Historically, we're more of a traditional industrial market, not a lot of flex. So again, I think we're going to see a little bit of an uptick in that area, and same with the manufacturing, R&D facilities. We're already starting to see inquiries on that as well. So I think the tenant mix will probably be a little bit more diverse than it has been in the past. And all in all, I think we're going to see it's going to be a pretty good year. I think we're going to continue to see positive absorption, and that vacancy rate continue to decrease overall.
Our primary offer to the marketplace is our time and our knowledge, and whether you're a buyer or a seller, a tenant, a property owner, that is what TOK offers. And our unique offer to the market is, it starts with our data. We have our own incredible research team, and we have an integrated marketing team, and because of that, we're able to be extremely nimble and tailor what we provide our clients and provide them the highest level of both our data and our marketing expertise. And that's one of the primary things that sets us apart. And our property management arm also provides opportunities in both of those segments, primarily on the data side because of the history we have, the number of properties we manage, expense data, etc. So those are things that really set us apart, and we have chosen to be independent and not work with a national firm or become a national firm over the years, so that we have that ability to be tailored and nimble and flexible in market conditions.
I enjoy working with our clients. I enjoy working with our team. We've got a great team here at TOK, and so it makes it fun to come to work every day. But really enjoy helping clients get into the best position possible through their lease or through the purchase of a building or an investment property that helps them to either grow their business or start their business or find a good investment. Having them be successful really helps me feel good. And then, as I mentioned before, helping entrepreneurs to start their businesses is a lot of fun.